Hey everyone, Russell Gray, co-host of the Real Estate Guys radio show, here with another edition of Boots on the Ground. And this time we're talking about the market of Central Florida. And joining us is our Boots on the Ground guy, in this case, Wagner Nolasco. How you doing, Wagner?
Hi, Russ. Thank you so much for having us. We're doing great. How are you?
Good. Yeah, no, excited to hear from you. You know, Central Florida has been one of my favorite markets because I just always felt like what was going on at the macro level in terms of the economy, cost of living, demographics, favored a lot of people being interested in that part of the world. And so now here we are in a very difficult economic time. And so I'm kind of curious, what are you seeing? Are more people moving in, moving out? How robust is that local economy in terms of demand for housing?
We have seen a big migration trend overall, especially from the north into Central Florida. We have over 1,000 people moving in almost every day into Central Florida. So the cost of living plays a big impact, right?
Yeah.
Once you get confined into 100 to 200 square feet up in New York City during COVID, and then you see you can get probably a four-bedroom, 1,800 to 2,000 square feet house for half of the price, it attracts a lot of talent coming down. So we have seen a big migration pattern into Central Florida, Russ.
Okay, so that's on the demand side, and that doesn't surprise me. And I think really with this whole lockdown, where people who before were going into offices and maybe worked for companies that would never have considered work at home programs, and all of a sudden they were forced to figure that out, they may realize, hey, you know what? Those things I was concerned about aren't really that bad. I mean, we're able to get the work done and people are happier. And now I don't need to pay for an office, and I could actually have people move to a more affordable part of the world where they would enjoy living, pay less taxes, and I could actually lower my payroll costs and still give somebody a better quality of living. I don't know if that kind of thing is happening in the real world, but if I'm a businessman running a business and I could lower my overhead without losing my great people and improve their standard of living by taking advantage of what I've learned in this crisis, I would imagine that Central Florida would be a market that would be appealing, especially for those people over on the East Coast, between the cold weather up there and the cost of living and high taxes. Okay, so what about on the supply side? What's happening on the supply side of the market there?
Supply is very limited right now. A lot of the construction supplies are limited at this time. We have seen some of the COs, the certificate of occupancy, is taking a lot longer to be issued by the city. Some of the building departments were closed for a little while. So some delays were actually seen and expected into the new construction aspect. And we have seen that we have now 13% less inventory than what we have demand. So Central Florida, very atypical from some other regions in the US, we have received so much demand that inventory is really, really low right now. So we have seen people cashing out of the stock market, people actually moving from apartments into single family homes. Nobody wants to touch the elevator button that everybody does live next to you. So we have seen a big migration pattern, especially into single family homes. Inventory is low, sales are very high. But we're learning how to live the new norm. I think that's what it's called.
Yeah, well, I mean, some of the supply, what I call a production lag, what happens sometimes is that demand spikes for whatever reason unexpectedly. We saw that happen in the Bakken. We saw that happen way back in the day in the Go Zone after Hurricane Katrina. There was in the adjacent markets, there was a lot of demand and there was just no way for inventory to come online. I always get concerned about getting caught in a lag, meaning, there's a lot of appreciation happening and you think a market is taking off and you buy in betting on the come, and then all of a sudden supply ramps up. But in this case, it could be a little bit of the same thing, except not with the negative outcome. In other words, you've got temporary restraints on building because building departments and permitting departments are closed because of the lockdown. Supply chains are disrupted, labor pools are disrupted, and maybe there's, obviously a degree of pessimism or at least hesitation to move forward on the building community. I don't know how plugged in you are to the building community or kind of the sentiment. I kind of look at it on a national level, and ironically, sometimes it seems to be pretty high. I think builders tend to be pretty bullish in spite of what's going on. Do you have any read on that in your particular market?
I can tell you in Central Florida, everybody it's moving forward at full speed. Supplies are very limited. They are actually coming in slow, especially from overseas. So we have seen supplies actually increasing a little bit on prices for as cost is concerned. Big builders, national builders, they did get affected tremendously by their stock devaluation in the stock market. So some of the big projects, especially for homeowners that were targeted, they're actually slowing down. They're finishing what they have. They're not starting new projects, which is going to cause even a bigger demand for inventory and not enough supply. So what we see in Central Florida is existing communities are continuing to being built. Big national builders, which is exactly the contrary of what we have been practicing. They are actually not starting new projects because they got so much devalue into their stocks because of the crash that we had. So we have seen them slow down a little bit. On the other hand, medium-sized builders are very aggressive. They're purchasing land, they're starting new projects. We work with 9 builders directly that build exclusively for us. And some of the data that I can tell you is in June, we sold almost 104 properties. July, we haven't finalized the numbers yet, but we're at 78 properties. So the demand is huge, not enough supply. The market will see that effect, which is exactly the contrary from 2008. We had so much supply and not enough demand, very speculative market. Today, we have the demand, but we have very limited supplies, and it will take a while for this to normalize for us.
Yeah, I think that's such a great point because it's, I think, probably clear or becoming more clear, although this is severe and arguably going to end up being more severe than 2008, it's also very different. It's very different. I mean, they're similar in terms of the threats to the credit markets because obviously there's all kinds of bankruptcies. When you stop cash flow, debt goes bad. And their gold, as we're recording this, gold just punched through 2050. So, we're looking at a decline in the dollar, which always bodes well for anything denominated in dollars that's real. And real estate certainly qualifies. So it's some interesting dynamics. So that's good to hear. So let's jump over onto the rent side. Obviously, the most important concern that income property investor is going to have is the income. And it's hard to get, I think, a gauge because there's been so much supplementation with unemployment, bonus unemployment benefits. Obviously, as we're sitting here, they haven't worked out the next deal for whether or not they're going to extend those or to what level they're going to extend them. But I got to believe in an election year, I don't care which color you are, you're going to be generous with that checkbook and make sure that voters, aren't out sleeping under bridges, or that's the surest path to getting kicked out of office. So I'm not overly concerned about that. But with that said, what are you experiencing? What are you seeing in terms of actual collections trends in your own portfolio, and then maybe what you're seeing around the marketplace from others?
This is a fantastic question because at the end of the day, right, the rents really and cash flow dictate how good of investment it is for an investor. We have learned a lot. We started in April, we were actually at 96% collection. What we call collection on time is actually the first of the month. We have no grace period until the 5th. We're very strict in collecting the rent. So if you haven't paid your rent by the 1st, we will actually not account that as paid. So 96%, we understood that at those times, so April, May, June, and July, we learned a big lesson that we were not attentive to it. We now call every single tenant that we have on a bi-weekly basis. Are they okay? Can they pay their rent? Can they pay partial of the rent? And what we have seen, Russ, is we are now at 98.5 collection rate. Meaning we're collecting more now than what we were before the COVID. And we have learned a big lesson, right? That communication with the tenants is crucial.
Yeah, that's gold right there. That's gold right there, Wagner.
It really is. So there's always room for improvement, even if you're facing some tough times. So we have seen collections are high. We have seen demand for rents are huge. We have listed, actually, Gene purchased 3 properties in Ocala, Florida, and we put them for rent. So during one weekend for those 3 houses, single family homes, 3 bedroom, 2 bathrooms, we had 51 tenant applications.
Wow.
It's amazing, right? So as of today, we're very proud to say that we haven't had any problems collecting the rents. We're up to 98.5%. all of our inventory is currently leased. So everything that is coming on the market is absorbing really quickly. And we are learning how to communicate better. Do we see that this can change in the next few months? It might. We don't see that migration trend affecting us. To the contrary, we see some of the industries here in Central Florida suffering a lot, such as the tourism is going to suffer a lot. Hospitality is suffering a lot because of limited guests coming in. But on the other hand, the migration trends within the U.S. is really helping our local economy.
Yeah, well, I mean, you probably would have gotten some of that anyway because, that is an area that is fairly attractive to retirees. And when you consider that there's a lot of people that are, maybe retiring that hadn't necessarily planned on retiring, so early retirees who can't afford to live maybe in more expensive areas where they thought they were going to be able to retire and they can come to a place like Florida, plus everybody that would have done that anyway. So you've got that demand, and then everybody else, like we talked about the people that have been emancipated from the office and can still work remotely. And so I think you have some of that. So I think you have a lot of pluses going on. Let's talk a little bit. I mean, not that this is necessarily relevant, but obviously Florida we know is a fairly landlord-friendly state, but there's been a lot of activist policies made to protect tenants. What's going on in your market in regard to that? When you do have somebody that doesn't pay, are you restricted or limited, or do you still have the ability to get them out and get somebody else in? What's that look like?
As of right now, we're very restricted. We're not allowed to do any evictions at this time, even though, as you very well said, I mean, we're very friendly for investors here. And usually an eviction is about a 45-day process. It's minimum investment to do that eviction. And actually, the sheriff will help you in case of the 45th day. If it's executed, the order of eviction, the sheriff will come and help you evict the person. As of right now, we cannot evict anybody. We haven't felt, other than that 1.5% that have not paid by the first, but all of them are in payment plans, so we have seen that increasing. But as of right now, we are restricted on evictions.
Okay, so I think you're mitigating some of that risk just by enhancing your communication and building a personal relationship with those tenants. That's what it sounds like.
Absolutely.
Yeah, yeah. Our guy in Memphis is the same way. They're just fabulous with investor relations. That's a big lesson for anybody watching this. If, at the end of the day, your tenants are your customers, and if you want to retain them and you want them to be happy about the business relationship that you have and look at it in the long term and not just in the short term, then you got to have a great personal relationship. So kudos to you on that. Okay, so I think the last thing that I'd just like to cover real quick is with the supply demand dynamic. Obviously, you've got the potential for prices rising, and then you've got the rents, which I guess are pretty strong, and with more people coming in, a fair amount of demand. And of course, the other thing is we got record low mortgage rates. So when you put all that in a blender and hit puree, what are cash flows looking like in terms of investors coming into the market? If someone were to pick up the phone right now and say, "Hey, Wagner, I'm an investor. I want to get into the market. I want to build a portfolio of single-family homes at cash flow." What does that look like right now?
So we have very different markets. We have very high appreciation markets such as Poinciana and Palm Bay that historically we have seen 10 to 12% in appreciation in a year. Some of the Palm Bay houses, for example, Russ, they will probably give you, they will appraise today. We're selling them between 220 to 225. We have seen appraise come in for those houses up to 245, replacement cost of 274. So you will buy day one with equity built in.
Wow.
That will probably give you 6 to 8% a year on positive cash flow. If you go a little bit more towards Sebring and Ocala, you're almost at the 1% rule. So very, very fat cash flows, really nice, very low acquisition cost at 159.9 for a 3.2 brand new construction, with granite and all hardwood cabinets, so on and so forth, hip roofing. So it is very affordable to purchase and for entry invest. And I think you just said the right words, right? We have seen clients that are closing with 20% down with 3.9 to 4% fixed for 30 years. We have seen 25% down, 3.674. I don't know what's going to happen on the market, Russ. Maybe you have a little bit more of a pulse on that. But what I can tell you is this. If you have a very, very good property at a very low fixed interest rate, and you have a good tenant, in which 80+% of our tenants, they usually stay in a house for 3 or more years. So that actually diminishes your risk tremendously for investment because are we going to have an inflation? We don't know, but you have a 30-year fixed. And we have almost 172 plus countries in the world. The only country that you can get a 30-year fixed is the US. And
Yeah,
that's
no, I
just
mean, I think
amazing,
right now
right?
in today's market with the Fed printing trillions and trillions of dollars, they're basically lowering the burden of debtors. And real estate is the best vehicle out there in order to get into debt. I think the thing that an investor would want to pay attention to, and this is not necessarily you know, relevant directly to your market. I think it's true in all markets. Is that right now is not the time to be taking a short-term approach. I think if you're going to get into a property, and it should always be this way anyway, but you're really getting into a long-term relationship with the market. So you want to pick a market that you like in the long term, who's got great dynamics. You want to pick a property type that is going to generally be in high demand in good times and bad. You're going to want to pick a financing structure that you can live with long term, and it doesn't get any better than what's going on right now, to your point. And then you got to have a great team who can really manage that thing at a high level to get you through the difficult times. And I think the other thing is what you're saving in interest costs and perhaps in down payment. I think you probably, as an investor, want to be a little bit more liquid, have a little bit more cash on hand to get you through those rough spots. But if you're looking at 10 years down the road, 20 years down the road, I think, for my money anyway, Central Florida is probably not a bad play because I think the national demographics, the national scene, and what's going on and how Central Florida is positioned compared to the rest of the United States, it's got to be one of the very attractive markets. So, well, good. So, Wagner, I really appreciate your time today and all the great information. If people are interested in contacting you, we've got a contact information in the links below, and of course you get your thing all over your banner behind you, which is excellent. And you're a provider network, so he's a Wagner and his team are a member of our Real Estate Guys Provider Network. You can check them out at realestateguysradio.com under the resources tab. Anyway, so we'll do this again next month. And if anything breaks that you think is hot news in between now and then, give us a call and we'll do kind of a mid-month update. But these once a month touch points are great for just kind of us keeping our thumb on the pulse of what's going on in the market. So appreciate the boots on the ground update, Wagner, and we'll talk to you next month.
Thank you, Russ, so much. I just wanted to say something that is very relevant to our market, right? We set up a lot of great things and some not great things about Central Florida. One of the trends that we have seen, which is really important for the next 6 months or for the next 10 years, we have seen some of the industries here suffering a little bit right now, like the hospitality industry, the tourist industries. But we have becoming a huge logistics state, meaning in all the areas that we have big economical drivers, we have seen Amazon setting up distribution centers. People are shopping more online. Napa Auto Parts, Chewy, huge distribution centers going in with big FedEx new hubs. So we have seen a big trend in increasing distribution and a lot of the online supports. So Florida has a lot of surprises coming up, even for us that we live here.
Awesome. Yeah, well, that's good news. So I forgot to ask you about the local economy. I left that off the checklist. So thanks for bringing that up, and we'll get the next update next month. So appreciate it, Wagner. Thanks so much.
Thanks, guys. Have a wonderful day.
All
Thank you
right,
for
you too.
having me.
All right,
Appreciate it. Bye-bye.
bye.